Next caller is Gerald from New York.
It's Gerard.
Gerard, sorry about that.
Hello?
Yes, you're on the air.
Yes. Peter, listen, I joined you about 6 months ago. I am totally unhappy with what is going on.
Well, I mean, look where it has to do with the timing. I mean, you got in, unfortunately, when the dollar was at its absolute lows and before the majority of the stock declined. So there's nothing we could do. How much, what percentage of your portfolio, of your net worth, did you invest with us?
About 80 or 90%.
Of your entire portfolio? I mean, of all your savings, you didn't keep anything liquid. You didn't have anything in precious metals.
I have things liquid, but what am I going to wait? Am I waiting for my return till the Messiah comes again?
Excuse me? Oh no! I mean, we bought you dividend-paying stocks, right?
Well, yeah, but my dividends.
The dividends are coming in.
Now I've lost probably close to $500,000. And what am I going to get? Dividend stocks paying on $500,000?
You're not losing anything. Remember,
as opposed to $1.5 million.
No, you're not losing anything. Have you sold anything?
No, I haven't sold anything.
Well, then what have you lost?
I understand. I was making 4 to 5 or 6% here, and I came over to you on your.
You're making more than that. I'm sure the dividend yield that you're getting on your portfolio now is more than that.
Is more than that?
Your yield, the dividend yield.
How can it be more than that when I'm not making my original investment? And
you're saying
my money has.
You're saying your stocks are down. But I'm not talking about the stock. I'm not talking about the current market value of the stocks. I'm talking about the dividends that your stocks are throwing off, the income that the account is generating.
Say that again?
The income the account, let's assume somebody put, what did you invest, $1 million, $1.5 million?
Yes.
All right, so let's say you invested $1.5 million, and we invested it in a portfolio with an 8% yield, right? Even if that account now is only worth $1 million and you're down $500,000 on paper, that 8% dividend yield is still being paid. You're still getting 8% a year income on the $1.5 million that you put up. Now, sure, given today's market situation with today's exchange rates and today's stock prices, if you were to liquidate that portfolio, you would take a substantial loss. But if you don't liquidate the portfolio, if you simply collect the dividends, which is what we planned on doing all along, in 2 or 3 years, that $1.5 million portfolio could be $5 million. And it still isn't going to matter because we're still not going to sell it. We're still going to continue to collect the dividends. And the reason you own that portfolio is because if you kept your $1.5 million in the bank, earning whatever you were earning, at some point in time, whether it's 2 years from now, 3 years from now, 4 years from now, you'd be broke because that $1.5 million wouldn't buy you anything. That's the problem. Now, sure, had we waited 6 months, we could have bought you a lot more stock for your money, but, we don't have a crystal ball,
I'm not asking for a crystal ball. I'm just, stop saying these stockbroker platitudes that we're going to make.
I'm not saying the stockbroker platitude. Look, every single stock market in the world went down by about 50% or more in dollar terms. The Hang Seng market dropped 60% in a few months. It's cheaper than it was in 1998 in the aftermath of the Asian economic crisis. I did not think that Hong Kong stocks would be trading at 1 and 2 and 3 times earnings. But they're not going to stay down here. They're not going to stay at this. They're not going to be at these prices when you sell. They're only at these prices for people who are leveraged up and who are being forced to sell right now. That's my point. There's no doubt in my mind that probably even a year from now, your account will be worth more than when you set it up. And the fact that it's worth less right now isn't going to affect you. In fact, it affects you in a positive way.
You know what? I'm reading in triple for your book. You had said that the .com. I'm in a couple stocks or 3 or 4 stocks, more than a couple, that have gone down more than...
Oh, I know that, but they're not. Look, there are some stocks in China.
I mean, Peter, what happened in dot-com bomb?
But no, it's a difference. When the dot-com collapsed, companies that had no value collapsed, right? The stocks that you have that have collapsed have real earnings. The stocks are now trading at 1 and 2 times earnings. Some of these stocks are paying 30% dividends. But the difference is the dot-coms had no dividends. They had no value. And when they collapsed, they stayed down because there was no real value behind them. The stocks that we bought you that are down have tremendous real value. They're real companies with huge assets and huge earnings. These are fire sale prices. There's a huge difference between a worthless company that was a bubble collapsing and a valuable company going from a PE of 10 to a PE of 1. This is not the same situation. Trust me on that. I didn't buy any of the dot-coms. I understood that. I own most of the stocks that you probably own, some of the ones that are down a lot, and all I've done personally is buy more, and I think it's a fantastic opportunity. I'm not worried about the fact that I put some money in at higher prices. I'm getting more money in at ridiculous prices, and even if you're telling me that you don't have the wherewithal to put in any more money, well, I think you're still fine. It's not, you're not going to be hurt a year or two from now when these stocks are higher than what you paid. And we made these investments with a long-term time horizon. We didn't tell anybody to invest with us because we said in 6 months you'll be able to cash out with a profit. No one ever said that.
I didn't, but listen, 6 months is different from 5 or 10 years.
Look, I understand what you're concerned about. I mean, if I thought that the stocks would fall this much, if I knew it for sure, I would have told everybody don't invest and wait. But I thought the underlying problem is too severe, that the problems with the dollar are too great to risk sitting in dollars hoping that the dollar was going to rally as this crisis unfolded. But I did mention in my book, did you read Crash Proof?
Of course I did.
Yeah, well, in that book, I specifically said in my chapter on liquidity, I have a whole chapter, read it, that I said initially as our economy started to collapse and our market went down, that there could be a big sell-off in the foreign stocks that we own. I said that. And I said that's why you want to keep some money in reserve to take advantage of those bargains if they come up. Now, I didn't know if it would happen for sure, but I thought it was a possibility. But I didn't think it would mean that we were wrong in our strategy.
Peter, listen to me. A PE at 10% at $100 is $30. Okay? At $10, it's $3. So where is what are we going to live on?
No, your yield, the yield hasn't come down. I mean, the yields have come down a little bit because the exchange rates. So if you're getting dividends in Canada or you're getting dividends in Australian dollars, the dividends are less valuable today because those currencies have come down. But the earnings of these companies have not come down. Some stocks, yes. The companies that are in the commodity space, like companies that are mining base metals or oil and gas companies, their earnings have come down because the prices of these commodities have come down. But those things are not going to stay down. And when the commodity prices go back up, their earnings are going to come back up. And so their dividends will come back up. But the vast majority of the companies that you own, which are not commodity companies, their earnings have not been affected, and the dividends are going to still be there, just like we told you they would. But anyway, I don't want to keep having the same conversation on the air, but if you want to talk about it more, feel free to call me personally in my office. You can call me at 800-727-7922. Call me tomorrow. I'll talk to you about it off the air.
Thank you.
All right. Anyway, and I understand the situation that this gentleman is in. I mean, anybody that started with Euro Pacific Capital in the last year, is way down. I mean, if they were to